We invest in gold and silver. Even general market investors hear this all the time. We're in a bubble. There's gonna be a crash. The doomsayers are everywhere. Some of them have been saying this for years, even decades. But are we really in a bubble? Are we really going to have a crash? And what does that mean specifically for silver and gold if that are to occur? Let's talk about it in this video. I've got some interesting points I want to bring up with you. Let's do it right now.
Set, go.
Well, unfortunately, one area we know there are not bubbles is in the price of gold and silver, and especially the precious metal mining stocks. But everywhere else we look, there are bubbles. Maybe they've been deflated a little bit over the last 3-4 months. But when you look at the stock market, when you look at the bond market, when you look at the real estate market, when you look at almost any market, especially in the United States, but I think it also holds true for a lot of areas around the world as well, there are definitely bubbles. We've got the gurus, right? The Jeremy Granthams and the Robert Kiyosakis and the Michael Burrys of the world. These guys that can tell the future. They know that we're in a bubble. And something I find very interesting, and I'll be curious your thoughts on this matter. Doesn't it seem like that when everybody's talking about something is bound to happen, especially in the stock markets, that it rarely happens? I'm not saying that it never happens, but what I'm saying is that when you got all these people talking about, oh, there's going to be a crash, it's going to be epic proportions and blah, 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 that those things rarely come to fruition. That usually when those crashes, when those major corrections do occur, they usually come out of the blue. I've got another very interesting factor we need to consider when we're talking about crashes. But first, a few matters of housekeeping. You're important. Thank you for deciding to join me today in Ron's Basement. I honor the fact that you're here, and I appreciate you giving me some of your precious time. You're always welcome to crash into the Ron's Basement YouTube page. Now, if you like my content, please subscribe to my channel, give the video a thumbs up, turn on the bell notifications, leave a comment in the comment section below. You guys are doing such a great job of creating dialogue down there. We are learning from each other and getting to know each other. So thank you so much. In regards to the red shirt, my wife warned me this morning that if I wore the red shirt again, that might be the end for us. So I may need to crash in your basement, but I will change the red shirt when gold gets above $2,200 per ounce. Now, regarding the bear with the bag on his head, that's the gold bear responsible for the bear market in gold. His hood comes off at $2,500 gold, but I want to assure you, I'm not torturing him. He's doing just fine. As a matter of fact, hey, gold bear, raise your right hand if you're doing okay. All right, let's get back to the video. When it comes to crashes or major corrections in the market, I don't hear anybody talking about this important factor, and that is the effect that inflation has on those already negative returns. What I mean by that is this. Take, for instance, many of the tech stocks, the NASDAQ, down almost 25% from its all-time highs. If you add in the fact that over that year-long period, there's also been a reduction in buying power, aka inflation, of 10%, that makes the real return even worse, more like negative 35%. Now, I would say that would equate to at minimum, major correction. And I think some people might even say entering the crash zone. So maybe, just maybe, what's going on is that the Fed and our leaders, are they maybe running us through a slow motion major correction, aka crash? because our system can't really handle a serious crash. If we have a major crash in bonds, in the stock market, in the real estate market, our economy, our system in the West has grown so fragile that I don't know that the system could actually withstand such a shock. It's like when a 93-year-old falls and breaks their hip. That's a very unfortunate thing, but usually they don't survive that type of trauma. And it feels like our system is equated to that, like a 90-year-old human who's been nursed along to this point. So either they're going to crash the system. Now, I don't think that's going to happen. Definitely could, but I don't think that's what's going to happen. Or they could nurse it along for a little bit longer, which would be really good for silver and gold, and might explain why the Fed has become so outrageously vocal, especially in the last 2 to 3 weeks, about why they're being so tough, they're blah, blah, blah. Doesn't it make you just a little suspicious how coordinated, over-the-top hawkish talk we've had over the last 2 to 3 weeks? I want to underline the fact, though, that their actions, right, where they've raised rates to, has not really lived up to their hawkish chest beating and bravado. They're not taking major action. They're not raising the rates above the inflation rate, like Paul Volcker did, for instance, back in the late 70s, early 80s. They're just talking a big game to get as much mileage as they can out of the little extent that they actually can be hawkish, tight with monetary condition. Soon, the tables will turn. They'll have to go back to printing more money to keep the patient alive. And at that point, we should see better days for gold and silver and the precious metal mining stocks. And don't forget, we're going to have a big party here in Ron's basement. That is, if my wife hasn't thrown me out because I keep wearing this red shirt. But hey, by then, gold will be above 2,200, and I'll get to change into a pretty new green shirt for you and me. One thing for sure, I'll be here for you through it all. I appreciate you being here, and I'll look forward to seeing you next time.